Hi students, purpose of this video is to go through brief exercise 18-44 if you're in the spring 2023 course. That is related to reporting deferred taxes in the balance sheet. So if you don't have your book handy, I can still set up the problem for you. And what's happening in this problem is it's giving us several deferred tax asset and liability balances. So we don't have to calculate anything. It's simply giving us the balances and asking us how we would put this onto the balance sheet. So the first balance it gives us is it tells us we've got a DTL associated with depreciation for $20,000. So I'm going to put that one on our grid. I'm putting it in a negative just because it's a liability, and you don't normally have to do that, but you'll see why I'm doing it in this problem. The next one is a deferred tax asset related to contract revenue that we collected in advance. So remember, we've collected it in advance, which means that we had to pay tax on it, so we'll be able to not pay tax in the future. That's what makes it an asset. The next one is deferred tax asset related to bad debt expense, recognized on the allowance of $10,000. So again, remember, we're not having to do calculations like we're used to doing. They're just giving us the exact DTA or DTL balances associated with these events. And the last one is a deferred tax liability related to prepaid automobile insurance of $8,000. So if I asked you to tell me what the deferred tax liability balance was, right, I'll just pull in the two I've put in negatives to denote DTLs and I would sum them up. And they sum to $28,000. That's the DTLs. If I asked you to give me the DTA balances, I simply am adding up the positive numbers. And again, the problem just gave me these, which has made my life super simple. And if I add those DTA balances up, I get 34,000. So the problem's then saying, hey, how would you put this on your balance sheet? So remember, even though when we make our journal entries, we record the DTLs to the DTL account, we record the DTAs to the DTA account, after we finished all of that, the very last entry we do is we net them just for reporting purposes. So I have to look at which one has a higher balance, and in this case, my DTAs have a higher balance than the DTLs. Therefore, when I net the two, I'm going to have a $6,000 DTA balance. So somewhat straightforward. Remember, if they ask us for current tax, we always look at that income tax payable account. For non-current, we're always going to net our DTAs and DTLs and show if it's DTAs are higher, we show it as a DTA. If the DTLs had instead been higher, we would show that as a net DTL. Hope this helps out with that problem, and good luck on the rest of your tax studying.